Okay, hi there guys, welcome again to another session. This is Trader FX 711 showing you the FX 711 system. It's just something that I've come up with. It's unique to how I trade and make money in the markets. Okay, this morning we took a buy trade here, and let me just mark it out. If you watched the previous video, we took a buy at this particular point here. Alright, that was our buy. The end of that bar, we took a buy on the market. It was around 64.36. Okay, and we made a profit line up here that we wanted to target and hit. We've now come and hit it here. The time now is 6:10. It's 10 past 6 on Tuesday, the 24th of February 2009. Okay, let me just date stamp that for you so that you can see. If I click on that bar there, okay, we go over to the left hand side. You can see here the 24th of February 2009, 1800, which is a 6 o'clock candle, okay, which will finish at 7 o'clock. So that's the time there that we have there on this particular chart. So you can see here that the markets come here and hit our profit target right here at this point. Now we took a buy back here. We took a little bit of heat on this trade, right? The market came down to this low point here, but our stop was placed where this red line is, okay? Beneath that swing low. Okay, out of range. Real important that you understand that you got to keep your stops out of range so that they don't get targeted and get hit. One of the most lucrative things about Forex trading is that brokers like to stop hunt. All right, so if your stop is within range, that means you have a high probability of it being hit. Okay, so because this was the previous swing low, any stop that you have above that point is going to be at risk to be stopped out for you. Okay, so you can see here right at this right hand edge, this is live pricing here, our profit target has been hit. Okay, and let me just go to the spreadsheet here. If I click on this spreadsheet, okay, let's bring that up. Alright, here's our spreadsheet here. Alright, we took our trade just after 7 o'clock this morning at 64.36. That was our buy on the Aussie. Okay, we set a profit at 64.21. We brought one lot that was worth $1 for every pip movement. Because we had 25 pips that it moved in our favor, we made 25 bucks. $25 onto the old total now brings our new total here to 104,975. That gives us approximately a 2.44% return on this one trade. Okay, this trade took about probably nearly about 11 hours, just under 11 or 10 hours. All right. Okay, not that we had to do any work at that point. We just had to wait. That's all. Be patient for it to transpire. Okay, that's a 2.4% return on that one trade. Okay, in less than a day. If I go to my trade station, okay, if we have a look on the trade station here, okay, we've actually got a new balance here, 105.016. Now, why is that different to our spreadsheet balance? And I'll tell you why. Okay, our spreadsheet balance is 104,975, so it's about just over 25, 30, 40 cents. The reason why there's a difference in balance is because every day when you trade, if you go past the market open time, in my case it's 11 o'clock in the morning in my time zone, you either get credited or debited for holding an account over a 24-hour period. All right, the cutoff for me is 11 o'clock in the morning. So in this case we got credited a few cents, all right, 30 odd cents or so, or 40, okay, and that's why we've got this balance here, 1050, okay, And that's the trade now that we've made profit on. What I want to do is go back to the charts here. Actually, I'm going to go back to the spreadsheet and I'm going to put that new balance in. Okay, 105016. Let me put that in. Okay, 105016. Okay, slightly better return, nearly 2.5% return on that trade. So that's the balance we're going to carry over for tomorrow at 7 o'clock in the morning on the 25th of February. Let me just go set that up now. Alright, that's enough trading for the day. 25th February 09, we're going to wait for a 7 o'clock trade. Alright, and the new balance is going to be that balance 105016. Okay, if I do a 1% return on what I want to make here, it just gives me an ideal profit number. Okay, we get it fill down. Okay, $10.50. Okay, now if I bring this lock value down here, I want to go 25 pip profit. Again, we've got 42 as a lot value. We can't have half lots, so what we're going to be is trading one lot tomorrow. Okay, we'll get a projected profit somewhere around $25 on that trade. We just fill that down. That's of course if the trade is profitable for us, right? We don't know until tomorrow, right? Okay, and we get a projected balance of let's see. Okay, well, we're going to get a projected balance of about 1075. Okay, so we're going to put that in once we have done our trade tomorrow. All right, that balance will change. I'll just leave it for that. Okay, let's just go back to the charts. Okay, so you can see here now price is really skyrocketing away, but no need for us to chase it. We've made our money for the day, 2.5% on that one trade. One thing you can't do in this market is get greedy. If you can consistently make profits every day, you're going to make a ton of dough, right? Small profits, right? Just little bite, little chunks here and there. Okay. All right. So again, what you want to be doing as a professional trader is you want to be exploiting the market. How do you do that? All right. You learn how to exploit the late loser. Okay. So when it comes to tomorrow morning, I will look at another trade again and show you how to do that. Make some more money again. Okay, so let me just get rid of these parameters here. Oops, go back here to the chart. Okay, I just want to get rid of this line. Take this line out now. Don't need it, it's an old profit line. Take our old stop out. Okay. Get rid of these old lines here. Right, so far that's still the swing high, but that'll probably change tomorrow. Alright, around that point. Okay, so remember guys, to make money in this business, learn to exploit. Okay, you got to learn how to exploit. How? Because professional traders, right, exploit late losers. It's the late loser that will always pay the professional trader. One of the keys to that is volume. Right, volume represents activity in the market. Right, and if you can see who is playing, who is participating, it's going to give you a higher degree of accuracy of where to trade. Right, I like to wait for the late guy to come. When the late guy turns up, trade against him. Right, recognize that in volume. Okay, all right, guys, I'll catch you tomorrow morning. We'll look at making some more money tomorrow. Until then, have a good day or good evening or good afternoon, wherever you are. And I will catch you then for another day where we can look to make some more money. Okay? Bye for now.